So welcome to this video. In this video, we are going to discuss about accounting and finance functions within the business. So the contents of this video are: what is accounting, accounting and finance functions within the business, financial accounting, cost accounting, management accounting, and financial management. So first we'll discuss about what is accounting here. So according to the AICPA, accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. So accounting, we would have heard it in a common language like it is a record of all transactions in a business. So whatever transactions that happens in terms of money's worth gets recorded here. Okay, so once it gets recorded, it's also like classified. It's classified into accounts such as cash account, bank account, or creditors account, debtors account. So it's not only like recording, it's also like classifying and also summarizing. For example, what is the total cash balance in the company? What is the total bank balance which the company has? Or what is the total number of debtors that the company has? Okay, so it's recording, classifying and summarizing in a significant manner, and only money transactions or money is equivalent worth of transactions are getting recorded here. Okay, so any transaction here which is like worth of money will always have a financial character to it. Okay, and only these things are recorded here. Okay, so accounting is a very fundamental function of a business, because only when we are properly recording all the expenses and income of the business, we can find out the profit of the business correctly. So accounting becomes the pillar for a company's success. So we'll move on to the next topic. So what are the accounting and finance functions within a business? So in large organizations, the range of tasks that the accounting function needs to perform is very wide. So in a small company or in a small business, you don't have much of accounting and finance functions. But as the company becomes larger and bigger, what happens is the company has to undertake a variety of accounting works. So this often means that the accounts department is split into a number of different functions, each of which deals with a separate set of responsibilities. So if you're a small business, only like the owner itself will be like looking after the accounts. As it grows bigger, what happens is accountant is employed, and still if the company grows bigger, a separate accounts department is created. But if you look at MNC companies or very big companies, these very big companies like Bajaj, Hero Honda or Birla, okay, these companies will have a separate accounting department itself. Okay, and within the accounting department, it will be like divided into more specialized areas such as financial accounting, management accounting and financial management. So they are like divided on specialized functions. So what are these roles here? So we'll start from financial accounting. So whenever we tell accounting, people will always refer to financial accounting only. So financial accounting is concerned with the production of annual financial statements in accordance with relevant accounting standards and legislations. So what is financial accounting is, if your company is going to make some profit, some sales, okay, and some expenses, these have to be recorded and it has to be also submitted to the government. So if you're a small company, you just have to submit this records for the sake of paying taxation. If you're a large company, there are like so many rules and regulations which you have to follow. Okay, so only when you follow that, the company accounts are like approved. Okay, so your accounts have to be approved and your accounts has to be according to a particular standards which are prescribed by the government. Whenever a business transaction takes place, such as a sale, purchase or payment of an expense, there is a need to record the transaction in the organization's accounting records. So any transaction that takes places and which has a financial character to it, okay, or it's like you can express that transaction in money's worth, those transactions will be accounted in financial accounting. The transaction is first entered in the books of prime entry. So these are the books of prime entry. So whenever each and every transaction happens, whenever a sales invoice is raised or any bill has to be paid, okay, everything will be recorded. Okay, so whenever a cash transaction is paid, for example, some goods have been purchased in cash, immediately that bill, okay, immediately that bill will be like given to an accountant who will issue the cash, okay, and he will record the bill. Okay, so the cash which is going out will be recorded in the cash book, and any goods which are purchased will be recorded in the inventory books. So similarly, all purchases will be taken into account to the purchase book, okay, and all sales will be taken into sales book. Any other transaction which is not in any of these books will be recorded in a journal. So we'll discuss about what is financial accounting statements. So there are three main financial statements produced by most businesses each year. So these are, the first one is called as statement of profit or loss. So normally this is referred to as P&L account, okay, profit or loss account, or the income statement. But the latest terminology as per IFRS, okay, so International Financial Reporting Standards, okay, so as per IFRS, they refer the P&L account as statement of profit or loss account. So this account will detailedly tell you how much the business has made profit. Okay, so how the cost has gone up when compared to the earlier year, how the profit has gone up or down when compared to earlier. You can make a lot of inference through statement of profit or loss account. So the second one is statement of financial position. So statement of financial position shows you the total assets that the company has and the total liabilities that the company has. So assets are like divided into many subparts such as motor vehicles, buildings, cash, okay, inventory, receivables, like that. And liabilities which the company owes to third parties, like money which the company has raised from banks or from suppliers, okay, any loan that the company has raised, all will be recorded under liabilities. So the total assets of the company and the liability of the company should match, and that gets matched in the statement of financial position. So the statement of financial position is like normally referred to as balance sheet, okay, but the latest terminology is SOFP. The statement also shows that the stake that the owners of the business have in the organization or their capital. In a company, this is often referred to as shareholders' equity. So if you take a balance sheet, it has two parts. One is the asset and the other one is the liability. See, liability not only refers to the money which is raised from banks, okay, or from outside people, but also the money which is brought in by the owners will be recorded as a liability. Okay, so that's what they are telling here. How can like owners money be liability? So that we will see it in another video. Okay, so here if you can understand just like what are the things recorded in SOFP, that is like more than enough. And the last statement is statement of cash flows. So normally companies were not required to submit their statement of cash flows, but now governments throughout the world are asking companies to submit statement of cash flows also, because this helps the investor to know how the company has raised the cash, okay, in what manner it has come and in what manner it has been spent, okay, and how much is the balance. Okay, see, the cash balance is already known through the SOFP. Okay, SOFP balance sheet, you will know what is the cash position, but what is the opening cash, what's the closing cash, and how the cash has come inside the company and how it has gone outside the company gets recorded in statement of cash flows. So earlier it was called as cash flow statements, so now they have renamed it. So that's about the statement of cash flows. So these three elements are the most important elements of financial accounting.